Technology, financials, and healthcare are three sectors that could majorly influence your portfolio this year, and that's because they are the largest groups in the S&P 500. Bertha Coombs has the outlook for healthcare, Wilfred Frost, financials, but we begin with Josh Lipton on technology.
The NASDAQ surged to new highs this year, and 2017 promises more fireworks with dynamic gadgets, services, and the ongoing cloud wars. First, Google's head is in the cloud. The search giant controls just 5% of the cloud infrastructure market. In 2017, Google will double that, putting pressure on industry leaders like Amazon and Microsoft. Second, Trump doesn't scare Cook. On the campaign trail, Donald Trump went after Apple for manufacturing overseas, saying he wants Apple to bring iPhone production home to the U.S. That's not going to happen. The economics of bringing large-scale, low-skill assembly line work back here don't make sense. Tim Cook will counter that he already directly employs some 80,000 people. Third, the tech IPO pipeline heats up for the enterprise. Snap will make its public debut next year, but it's the smaller, enterprise-focused startups that will dominate the IPO market in 2017. Okta, MuleSoft, and AppDynamics will go public. Big established companies want to see the financials of their vendors before opening up their wallets. For Nightly Business Report, I'm Josh Lipton.
Having underperformed not just for most of 2016, but most of the last decade, banks have taken off in the fourth quarter, not least because of the election. As we head into 2017, here are the things to watch.
The yield curve will be key. Of all the fourth quarter factors that have driven the bank's rally,
the most important is the rise in interest rates. Whether the yield curve maintains its recent rise and steepening will be the major factor for banks' share prices. Bank of America remains the most geared of the big names to interest rates, which is why it has performed so well since the election.
Other Trump-related changes, the key thing here being whether he can deliver more positive surprises as 2017 arrives.
In terms of deregulation, lower corporate taxes, and repatriation of cash from overseas, all of which is very positive for banks. But how much is already priced in? A glance at how valuations have changed in the last few months shows the improvement in investor sentiment to the sector, but also the scope for it to improve still further based on long-term averages.
Risks remain. The main outstanding risk is credit quality.
Loan growth has been fairly strong in 2016, and fears remain about how late in the cycle the economy is. A spike in provisions would derail the positive turn in sentiment we've seen in recent months. The improvement in oil prices in Q4 has been another short-term positive in this regard.
For Nightly Business Report, I'm Wilfred Frost.
Repealing Obamacare is easy. The challenge for the Trump administration and Republicans in 2017 will be coming up with a replacement plan and pulling off a smooth transition. 3 predictions.
First, repeal and maintain Obamacare. Republicans will repeal the ACA, especially the unpopular individual mandate, early next year, but replacing it could take a couple of years.
In the meantime, they'll keep Obamacare subsidies, and to prevent a collapse of the market, they may come up with funding to offset insurers' losses, funding they opposed under Obama as a bailout.
Second, M&A on pause, with uncertainty surrounding changes to the Medicaid and Medicare government health programs, which are driving growth in health care.
Insurers and hospitals will refrain from big mergers in 2017 and instead work on partnerships aimed at bringing down costs.
Which brings us to more pay for value. Hospitals are already feeling the pressure.
Next year, drug makers, distributors, and pharmacy benefit firms will be on the hot seat to deliver lower prices, too. Bertha Coombs, Nightly Business Report.